Welcome back to the Dividend Diplomats YouTube channel. You got Bert, you got Lanny, and we're talking to you guys about a dividend stock that has been punished about 30% this year. And you guys have all been asking for this one as well. And that's what we're bringing to you, the viewers.
That's right. We have heard you loud and clear in the comment section. This is a stock you've wanted us to talk about. You know what? Not even just wanting us to talk about it. You're asking us, why haven't we talked about it yet? I think that's the one that keeps popping up here. So you know what? Silencing the critics today. We're just ending it. We are pumped up and ready to talk about this undervalued dividend stock. Before we do, though, smash that subscribe button below. Give this video a thumbs up. Thank you for the support, everybody. While we all keep marching towards financial freedom by buying undervalued dividend growth stocks to help grow your passive income. All
right, guys, let's rewind the tape back to good old 2020. You know, the pandemic.
Get one of those like when you returned it back to Blockbuster, you had the tape thing, just put it in there, hit the play button, rewind it. Let's do some of that, Lanny.
Yeah. So guys, 2020, you guys may remember Pfizer. They were doing a nice big old joint venture spinoff with Mylan. Pfizer was spinning off their Upjohn business to join ventures with Mylan to create a new public company. And that happened in Q4 of 2020 to create Viatris, which their ticker symbol is VTRS. They were creating this pharmaceutical conglomerate that really produced a lot of your standard drugs, for lack of a better way to say it, your Lipitor, your Viagra, some of the big common names that, may have been obviously hit by other generic ones being created to compete with these drugs. But again, a cash cow, cash flowing drug pharmaceutical company in Viatris. But some big things have happened so far in 2022. Again, not having been public for that long. We're talking a year and about 5 months of being their own company, reporting to the SEC. Viatris, again, ticker symbol VTRS, has had a very tough 2022 from a stock price standpoint. Bert, what has that stock price done in 2022?
That stock price is down nearly 30% year to date so far. And you can really trace that back to their last earnings release and some of the news that's been announced about the company, some of the things that they are doing. That's been the key piece of what caused the stock price to plummet. And what we are going to do in this video, in addition to run them through our stock screener at the end of it to see the current metrics, we're going to talk about that earnings release. We're going to look at the numbers. We're going to cover some of the noise a little bit. We're going to look at what the company's doing and give our take on it and see if we're going to be adding to Viatris by the end of this video.
Exactly, Bert. I mean, really the downturn on Viatris stock obviously happened towards that end of February. To kind of think about Viatris, they traded at one time $16 per share. They're now at $10 per share. $10.02 actually as of the close of March 11th. So guys, Viatris released their, obviously year-end and quarter-end earnings back towards the end of February. A lot of good points though, Bert. Tell me about what that revenue looked like.
Revenue year-to-date is up, not 1%, not 2%, but 50% year-to-date. That's right, 50, not 5%. Put a zero at the end, 50%. Quarter over quarter, 20%. So we're not talking small increases here. The company is making moves and they are growing that top line there. They aren't just sitting pat, just saying we're spun off. We're just going to kind of let the motions go and just keep going what we're doing. They are looking to aggressively grow that revenue.
And guys, I mean, quarter over quarter, doing the comparable comparison of that quarter, fourth quarter, their revenue was still up 20%. In fact, they even announced a dividend increase in the month of February. They increased their dividend from 11 to 12 cents, the first one in their company history, a 9% increase, Bert.
Yeah. So something they're not that concerned when it comes to the results. from there. And not only did they just announce the dividend increase, Lanny, what else was in there that's going to help return value back to shareholders?
They
What other
announced
thing
a
that couples with it?
$1 billion share buyback.
So it's probably, I mean, I would be shocked if they haven't used that full authorized $1 billion share buyback with how much that stock price has fallen after the earnings here, because you want to buy back the shares when it is undervalued. Yeah, we'll see. We'll see next quarter how much of it was actually used.
Well, doing the math, you could buy, quite a bit of shares outstanding. Just take 1 billion divided by 10, and you'll see how many shares that they can actually, bite off at the bit. I think that's what 100 million shares.
Yeah, it's a lot of shares. And you know what else too? Let's stay on the balance sheet while we're talking about it. So if they're going to potentially reduce their shares outstanding and their equity section, let's also talk about what was covered in the results there to talk about their debt pay down too. They're putting their cash to work by also reducing their debt. In 2021, the company repaid over $2.1 billion of debt too, deleveraging and still finding ways to increase that dividend and reduce the shares outstanding at the same time. They are putting their cash to work.
But guys, I know what some of the bad sentiment was when they announced. They lost money in the quarter again. They reported, I believe, from looking at their financials, which we'll put up here on the screen, from looking at their earnings per share or loss per share, they lost 22 cents per share in that fourth quarter of December. Okay, they lost $1.05 for the year. Okay, understood. Now, obviously, they're doing some other things that they announced. They are selling off components of their business. The first big one that was announced at the same time period was the Biosimilars business. They're selling to a pharmaceutical company in India for about 3.3 billion. And they're going to use that as well for the flexibility of their business, paying down further debt. And they announced this is just one of a series of sales, because I think they're trying to inject or receive proceeds of about 6 billion.
Mm-hmm. Yeah. So I mean, if you think about it too, you made a good point when we were talking about this before the video, Lanny. They're still trying to figure out what exactly they want to do as the company, where they want the strategy to go. They were just spun off from Pfizer. They're still figuring out which ones are the brands they want to sell off. Where do they want that core focus of Viatris to be as they continue to grow? So why not maximize the value of some of the brands, some of the business units, and make transactions to grab some cash now so they can reinvest it into the core business of what they want Viatris to become in the future.
No, exactly. So first, let's take a quick look through the Dividend Diplomat stock metrics of Viatris, focused on 1, the price to earnings ratio, 2, the dividend payout ratio, 3, the minimal dividend growth rate and history that they've had, the last and not least, the bonus metric of the dividend yield. Bert, talk to me about that price to forward earnings ratio.
All right. So let's take a look at this one. The price is $10.02. Let's pull in from, we always use Yahoo Finance, the average analyst forward earnings here of what they're expecting it to be. Forward EPS is projected to be $3.48. That gives you a PE ratio of 2.88.
All right. So obviously hard to 2.88 price earnings. It's almost like if they make some sort of net income here, their price to earnings ratio is going to be very low.
Yeah, no, I know. And I mean, it's insane. Yeah, with where it's trading. That's the funniest thing when looking here at this. Moving into the dividend payout ratio, it's also equally as funny. Their new annual dividend going forward is 48 cents per share. Divide that by the 348. That gives you a payout ratio of 13.79%.
Yeah, and obviously they've grown their dividend just 1 year so far consecutively at a nice 9%. Then looking at the bonus metric, the dividend yield, they're not at 3% anymore. They're not at 4% anymore because of their slide of 30%, the stock price plus an increase in their dividend. They're actually yielding now 4.79%, which is 3 to 4 times the S&P 500.
That's absolutely wild. So, I mean, looking at these metrics, it's always funny looking at Viatris with that super low PE and payout ratio, especially as more news gets reported about their earnings. The company keep putting out those new results. We're going to see how close they can get to those average analyst estimates going forward. But they did announce that 9% dividend increase. They have that history even before they were spun off where Pfizer has that long-term history of increasing its dividend too. So the management comes from the same kind of bloodline that is committed to increasing that dividend going forward. And of course, that yield is almost 5%. That's wild.
So guys, you probably want to know, what's our take on Viatris? What are we, the dividend diplomats? Because we each own shares, and you guys know, both Bert and I, we were buying Viatris stock all throughout 2021. Obviously, I even bought more shares when it was in the $9-ish range, I believe, a couple of weeks ago as well, just to, why not, $50 to buy 5 shares.
Yeah.
So Bert, I don't know if you want to go first or.
I mean, honestly, I think you kind of just hit it on there. I don't know how to summarize it any better than why not just buy a few more shares of the company while it's trading at $10 a share. At least that's going to be my perspective on it. Right now, it's $100 gets you 10 shares ish, about 10 shares right now. So for me, it's a very easy argument in my mind to say, like, yeah, let me grab 10 shares with my extra cash. Let me grab 20 shares. Like, it doesn't take a lot of cash to quickly grow your position in here. And since I bought it several months ago and it was at a slightly higher share price, this is a good way to help me lower my cost basis a little bit by nibbling and picking up a 10 or so shares at a time.
And obviously you don't want to throw good money at bad money. So I guess, do your own research, obviously make your own investment decisions, but I wouldn't make Viatris some large component of your dividend portfolio. But if it's a small position and you kind of want to just, grab more shares, like Bert was saying, I own 158 shares. That's not that much in the grand scheme of my whole dividend stock portfolio. I could see myself adding a little bit more, just, hey, again, it's trading at these insanely low prices, obviously risking money that I'm not afraid of. But at the end of the day, I think this is a very long-term focused stock. You really need to get them out of this, the early stages of being a public company and really seeing what type of business they're going to be.
And I think the key is, for at least for me, why I'm willing to continue to nibble is you're seeing strong revenue growth. You're seeing strong cash flow. They're taking steps to pay down their debt. They're not growing their debt to help fund that dividend increase right now. They're actually working to pay down their debt and improve their balance sheet. So when you look at the numbers, there are some trends in my mind that are like, yeah, you know what? Why not add a little bit more? To your point, Landy, I'm not throwing a ton at it. I'll throw a little at it just to keep building my position and lower my cost basis.
And again, to let people know, interest expense for the year was about $636 million. So lower debt, lower interest expense that they're going to have to, essentially take a hit through their financials on interest expense. So you kind of like,
yeah, let them know. I think that's an important thing to hide out. Every extra dollar they can save on the interest expense will flow through to help pay down the debt or grow their operations going forward. It's an excellent point to highlight.
Yeah. So guys, I'm not selling my shares. I'm holding, and I may be buying more at these levels, obviously at a safe level, not I'm throwing the whale at it.
Yeah, I think that's great. So everyone, and let us know below in that comment section down there, take a look down and see. We want to see all your comments. Let us know what you're doing about Viatris. Are you selling? Are you buying? Are you just holding and waiting to see what's going to happen? If you haven't already, subscribe to our channel and give this video a thumbs up so we can keep spreading the news about dividend investing.
Guys, that was the Dividend Diplomats take on Viatris stock, buying or selling or holding. You just heard it here from the DD. Guys, appreciate everything. That was Bert and Lanny from the Dividend Diplomats. Over and out.